Welcome to MUFG's Corporate Executive Video Symposium. My name is Lee Linderman, and I will be your event manager today. First, the event is intended for MUFG corporate clients and colleagues. It is not for attribution or members of the press. I'd like to point out some of the key BlueJeans platform features you should be aware of. Your audio and video have been disabled. If you wish to ask a question, we will be using the Q&A feature within the platform. For those joining via laptop, the Q&A icon is running vertically down the right-hand side of your screen. For those joining from a tablet or personal device, the Q&A feature is running along the top of your screen. Please submit your questions or vote on already submitted questions throughout today's session. If at any point you require technical assistance, please use the moderator chat feature. This feature looks like the silhouette of a person with a small chat box. Again, for those on laptops, the moderator chat feature is running vertically down the right-hand side of your screen. For those on tablets or mobile devices, look for the chat bubble located on the top right-hand side of your screen. For optimal viewing from a laptop, please use the slider bar located at the bottom of your screen. This will allow you to individually manage your view. For those on tablets or mobile devices, simply swipe left or right. Finally, we appreciate your patience with the video platform. Your individual internet connections and bandwidth may cause intermittent delays or buffering. If the issue is persistent, please exit BlueJeans and call back in using the audio-only dial-in numbers provided in your registration confirmation. Now it is my pleasure to turn today's session over to your host, MUFG's Capital Market Strategist, Tom Joyce. Tom, please go ahead.
Thank you, Lee, and thank you to all our clients who have dialed in globally for this very important discussion, navigating the landscape of Russia's sanctions. Unfortunately, this is quite a timely discussion, as we all know, and I'm very pleased to introduce, and I ask for your patience to allow me to do the slightly long version of the introduction to our two guests here this morning, given the importance and breadth of their background. Cari Stinebower is a partner and head of international trade practice at Winston Strawn. She's based in Washington, D.C. She has a deep expertise in sanctions policy, anti-money laundering, export control, and anti-corruption regulations. Her previous work includes working as counsel for the U.S. Department of Treasury's Office of Foreign Assets Control, or OFAC, as we all know. She has worked on drafting of UN securities resolutions and related executive orders, enforcement actions on congressional investigations, and anti-terrorism work. Cari is a frequent contributor in the public media and a guest lecturer at numerous prestigious universities. She is also a member of the America's Bar Association's Gatekeepers Task Force and a vice chair of the ABA's AML subcommittee. Cari, thank you so much for joining us today. I also have Brian Grant. I'm very pleased to say Brian is the Global Head of Sanctions Compliance here at MUFG, our own bank, Japan's largest bank and one of the largest banks in the world. Brian has previously held numerous senior positions at the U.S. Treasury Department, including as a compliance officer in the Office of Foreign Assets Control, OFAC. He's been a unit chief in the Office of Intelligence and Analysis at Treasury, financial attaché in the Middle East region, director of the Office of Global Affairs in the Office of Terrorism and Financial Intelligence. And I'm very envious that he holds both a bachelor's and a master's degree from the Georgetown School of Foreign Service. So let's actually start. Cari and Brian, I was very pleased to hear that you actually both know each other and have worked together in the past. Just a brief minute or two on that, which will, I think, give us all a sense for the kind of work that you have both done for many years now. Cari, let's start with you.
Sure, and thanks again for the opportunity to speak with everyone at the certainly a timely topic. So when I started at the Department of the Treasury, I started within OFAC as a programs officer. So that was before 9/11. So in the pre-9/11 era, that meant that I was assigned to the counter-narcotics section and spent a lot of time working with financial institutions in Colombia, specifically trying to identify money laundering and narcotics trafficking threats coming out of that jurisdiction. When 9/11 happened, everything changed, and we switched over to a primary focus in counterterrorism. So what that meant was that we took what we'd learned from the Colombia sanctions program, which was primarily collaborative and working with financial institutions, and some American businesses down there, and converted it to addressing terrorist financing. And so what that meant was that we weren't necessarily dealing with equally cooperative governments, and we had to evolve the sanctions programs on the fly in order to address what we'd identified as a new threat. So I think what I take away from that is that Treasury's authorities are pretty much the same as those that we saw under the old Colombia executive order, but they're being evolved and moderated and adjusted in order to address the new threats. And so what we see with respect to the activities over this last couple of days into the Ukraine essentially is an evolution of the original counter-narcotics programs that worked really well in Colombia. And so to a certain degree, some things are transferable, and in other cases, they just aren't, and they create a lot of trouble for the private sector.
And Brian, you've crossed paths and worked with Cari in the past?
Indeed. Cari and I go way back to the early 2000s. We were both sanctions designators in the International Programs Division at OFAC. And, you know, despite the fact that I've spent about 10 years now in the private sector, my equivalent 10 years in government, actually a little bit more, that's really my identity. I still view myself as a government guy, as a Treasury sanctions. So I spent time doing designations in OFAC, also compliance on the hotline, answering questions from beleaguered banks, dealing with increasingly complex sanctions programs. After doing that, I went into the Office of Intelligence and Analysis. The Treasury Department is fond of saying it's the only finance ministry in the world with an in-house intelligence capability. And that's true. And you see that to this day. You see that now playing out with Russia, the aggressive use of intelligence, the active use of intelligence, and marrying up intelligence and economic sanctions. And that's what we were really trying to advance in the Office of Intelligence and Analysis. Also served overseas as an attaché. And in my last 5 years or so at Treasury, I headed up basically the National Security Policy Office. So that was an office designed to deal with situations just like what we see now with Russia, which is teeing up a range of options for policymakers in Treasury and elsewhere to apply pressure against adversaries to the U.S. government, and also to shore up the international financial system and protect it from illicit threats. So that sort of thinking is really kind of, I think, central to what we see right now with Russia. And then after Treasury, I was at Citi, and now I'm at.
So, Cari, let's get right into the sanctions. Before we get to where we're going, tell us where we are now. What has Biden announced so far? And if I may say, why has it been, at least to this point, perhaps more limited than we were expecting?
Sure. So where we are now is a direct result of what happened with the Russian invasion of the two separatist regions in the Ukraine. So what we saw happen immediately after Putin advanced into those regions was sanctions, territorial sanctions, like what we saw on the Crimea in 2014, in the sense that those regions with a wind down period became off limits for U.S. persons and for anybody engaged in transactions in U.S. dollars, because of course they flow through the U.S. correspondent banking system. So those sanctions were interesting because I think everyone had heard the rhetoric from the European Union and from the Biden administration that everything would be swift and would be aggressive and we would stop Putin in his tracks. And so there was a little bit of head scratching when those sanctions went into effect. There wasn't a lot of impact, but what we did see were additional reactions rolling out with respect to the prompt designation then of Nord Stream 2, and of course the German decertification of Nord Stream. So the fact that Nord Stream has stopped in its tracks was something that I think everyone did expect and did consider to be a significant move, largely because of the impact on the oil and gas sector coming into the supply chain coming into the European Union. And then on the margins, we saw a designation of an officer of Nord Stream and some other minor sanctions, including some sanctions on banks operating in the Crimea and sanctions on this bank, VEB, which is largely identified with the government of Russia. And I think the initial reaction from the markets were that those sanctions were not going to be all that disruptive. And it may very well be that as a result of sort of the initial light touch, which the Biden administration kept repeating was just the first tranche, that we saw what happened last night, which was a full-blown roll-through with assaults on the capital city of the Ukraine, and then, of course, the sort of prognosticating from the press, but also sort of well-placed leaks from the administration that the next sanctions round, which should be announced later this afternoon, will target specifically the financial institutions, VTB and Sberbank. And the reason why those are important and more significant than the sanctions that we saw against the other financial institutions earlier this week are because of the interconnectedness between the US, the EU, and the Russian markets, in the sense that for our clients, which are typically multinationals, anything from restaurant chains to oil and gas providers to partners, private equity involved in M&A, what we're seeing is that VTB and Sberbank pop up repeatedly. They participate in facilities, they're active in the lending market, they're on the issuing side of a lot of letters of credit. They're also active business partners. So for a number of multinationals, they're joint venture partners, for example. And so if we do see sanctions against Sberbank or against VTB, what we're going to see is the complications of trying to figure out what it means to hold debt issued by one of those, or how do you unwind a joint venture? You know, those types of questions, the pragmatic questions are what we're going to see next.
So Brian, Cari's outlined for us largely what has happened so far, right? We have limited restrictions on a few Russian banks, limited restrictions on some Russian elites. We do have restrictions on U.S. purchases of Russian foreign debt. We've got some restrictions and sanctions on the separatist regions, as well as on Nord Stream 2. Cari began to take us into a discussion on what might happen with a few other banks. Maybe you could expand on where we are likely to go from here in terms of the energy sector, in terms of export controls, and so forth.
Sure, absolutely. First and foremost, the Treasury Department and presumably its allies, the U.S. allies, finish the moves against the Russian financial sector. So what we will see today is a designation of Sberbank, VTB, likely Gazprom Bank, Alpha Bank, Russian Agricultural Bank, some of the larger banks there, and potentially more. These were the set of actions that were planned for when they were initially assessing Russia would go right to a direct conventional invasion. There was a detour through Luhansk and Donetsk. So you saw just the more limited sanctions against VEB and Promizva Bank, but you'll see a return to that, the financial sector sanctions. In addition to that, we should expect to see Huawei-style crippling export controls. The administration has been very forward-leaning in its communication financial sector, and has highlighted that this tool, which was used with such great effect in the Huawei case, and in other cases, we're likely to see it. So we're likely to see concerted attempt to limit access to Western U.S. technology to Russia. I would not be surprised also if there were designations of large Russian companies. The goal of, make no mistake, right? The goal of the sanctions is to damage the Russian economy, severely damage the Russian economy. So they're going to take aim at the commanding heights of the Russian economy. We've seen that to date with respect to the sectoral sanctions, trying to deny future growth prospects to Russia's vital hydrocarbon sector by limiting access to medium and long-term capital. I think we'll see that redoubled. I think we'll see designations. Of course, there'll also be more designations of individuals close to President Putin. Generally speaking, those things are sort of names on a list, not as problematic, even if they have quite an impact on the individual targets themselves. But when you think about economic sanctions and you think about the authorities that the president has, you know, it can go as far as your imagination can go. Economic sanctions is really the International Emergency Economic Powers Act and other authorities give the president very, very broad discretion to prohibit all kinds of activities. And you can be sure that there is a very long list of measures. And if there isn't a rapid ceasefire, if this turns into a protracted affair with lots of bloodshed, you're going to see additional layers of sanctions, layer upon layer, kind of what you saw unfold over a 5-year period with Iran, but I expect it would be more compressed in the case of Russia, simply because the stakes and the equities are that much higher.
Cari, for the non-experts in the room, which in the audience, which includes myself, could you just explain a little bit how the coordination likely is working behind the scenes with two groups in particular? Number one, we have the U.S. Senate returning from recess on Monday, and obviously the Menendez legislation that is very far advanced. How does the White House coordinate with that? To what extent do they act unilaterally or in concert with the Senate? But then also the White House with our allies, in particular Europe, UK, and Japan. Give us a sense for how the coordination is taking place, as opposed to more unilateral U.S. action from the White House itself.
Sure. So the Menendez legislation is a good place to start. I think the general consensus is that it was defunct when they went into recess, but it's still a useful tool in the sense as Brian laid out, because it identifies the financial institutions that essentially the Democrats and the Republicans and largely the administration have agreed are appropriate for sanctions. And the one sticking point, or two sticking points, were whether to do preemptive sanctions, which is now a moot point, and then second, whether to go after the entire SWIFT network and deny Russia access to that. So now that there seems to be a certain amount of consensus, it makes it easier potentially for the Republicans and the Democrats to agree on a revamped Menendez piece of legislation that would be something that the administration could sign. But the conversations that would happen traditionally between the executive and the legislative branch are one that happens through legislative representatives. And so the dialogue is fairly open and fairly free-flowing at all levels. So it would happen at senior levels, but then as Brian and I both experienced, sometimes it gets pushed down to the working level as well. And so you would have coordinating or drafting sessions. You'd have legislation passed back and forth between the legislative affairs folks at Maine Treasury, but then bringing in the experts to look at how you could adjust or tweak the sanctions, as drafted in legislation in order to make them really effective. So I think the Menendez legislation is still a really good draft for what could happen. What's interesting is the Republicans on the Senate Foreign Relations Committee were very active on the talk shows this morning, hammering the need to bring in the SWIFT sanctions in order to essentially cut off the Russian financial system from the rest of the world, because I think they have their own messaging system, but only one other financial institution in China is part of it. And it sounds like, from what we're hearing, and Brian has separate connections as well, that SWIFT for now is still off the table, which I think is encouraging. But that's largely to the second part of your question, which is the conversation between the executive branch, Treasury people in the United States, and then their counterparties in the European Union are essential in order to provide a united front if there's going to be any success in dissuading Putin from moving forward. So a lot of what we're hearing from the Europeans is that they're working now to encourage some of the member states who were looking at more relaxed rollouts of sanctions to agree to a more aggressive schedule given the activities of last night. So again, what Brian said is what we're hearing from the Europeans as well, which is that there would be concerted effort to target the members of the Duma, for example, that voted in favor of the incursion into the separatist regions. And so it sounds like the coordination between the EU members, although it's a little bit more complicated because you've got, just the US on one side and then you've got all the EU member states with slightly different interests, is going to be really important in order to dissuade. But that conversation is something that's been going on at the working level, but also at senior levels for the last month at least.
Brian, assuming we get the continued escalation that I think we have all underestimated and I think is likely to continue, at least my own opinion, assuming we get, unfortunately, continued escalation here, let's talk about expectations for the impact on Russia. And what I mean by this question is, how is this going to be different, and is it going to be different than the more surgical approach taken in 2014, number one? Number two, what kind of response do we expect from Russia, either in terms of counteractions or evasive activity? And then related to that, maybe you can incorporate into your response, to what degree has Russia built up sort of a fortress balance sheet here with over $600 billion of FX reserves, less debt, less exposure to dollars? What is your sense of, Russia's ability to absorb what is likely coming their way? Is this time going to be different? Let's start with you on this, Brian. I know that's a long question, and Cari, let's get your observations as well, because ultimately I think that's what so much of us care about.
Sure. In short, I do think this time will be different. Much has been made of Russia's fortress balance sheet, the steps that it's been taking, certainly since 2014, to sort of insulate itself, develop alternate mechanisms, payment mechanisms, strengthen its relationship with China. But I think there could be no debate that these measures are going to have a significant impact. The designation of its major financial institutions, the export controls that will freeze Russia out from on the banking side, the international financial system. And it's not merely those banks operating in jurisdictions that apply these sanctions, it's globally. Banks, especially the larger banks, take a global approach, generally speaking, to the extent that they can, considering conflicts of law, to risk management. So I think you're going to see a real retreat from the Russian market. I think the secondary market prohibitions on sovereign debt are significant. Russia does have tremendous reserves. They can weather the storm probably for quite a while. They can prop up their banks, but that bleed of foreign exchange reserves is a policy goal, right, for Russia. And even if, the country will be able to continue. There's certainly no doubt about that. It's, a large enough country, and it does have some outlets, but it will have a significant impact. It will significantly eliminate prospects for real, I think, future growth. And economic sanctions are not the only tool in the tool. There's a suite of measures, diplomatic, military, alliance-driven, that the U.S. will be able to bring to bear in partnership with its allies. And it is notable that you're seeing Japan coming along and being pretty closely to what the U.S. and its Five Eye allies and European allies are saying in terms of the imposition of the embargoes against those two areas, sovereign debt restrictions, that kind of thing. What would likely be the response of Russia? Well, certainly there's been a lot out there about cyber attacks in response, and absolutely that's a comparative advantage. And that may well happen. Hopefully, financial institutions and other, corporates have hardened their defenses there. That's certainly an option. There are large U.S. companies with a presence in Russia. They may come under pressure, or Russia may seek to allow them to keep operating to preserve some kind of access.
Cari, just to continue with this question, if we look at Putin's actions, he's clearly aware of what we're capable of doing, and he has proceeded. So maybe you could comment on, it's difficult to to comment on Putin personally. We don't know what's going on with him in terms of how he thinks about things, but clearly he thinks this is something he can absorb. What are your expectations on how this time might be different or not?
So I would look to how the world reacted to the 2018 designations, most of Rusal and EN+. So what happened in that instance was there was immediate sanctions on Rusal, which affected the global markets on aluminum, because aluminum trading tends at least to be done in the U.S. on an annual basis. And so we saw this massive disruption in the aluminum supply chain, which triggered almost immediately a series of general licenses coming out of the Department of the Treasury, authorizing wind down activity, which is what we've seen with respect to the VEB sanctions that came out yesterday. And I would imagine if VTB and Sberbank get sanctioned, we would see a similar pattern. In discussions informally with the White House, it's been pretty clear that the administration learned from the Rusal designations in 2018, and that they do appreciate the importance of providing the Western businesses, the non-Russian businesses, a significant amount of time in order to unwind activities. But I think that the difference would be that what we're going to see is a combination of the sanctions, the sectoral sanctions that we saw in response to the incursion into the Crimea region, plus the list-based sanctions that we saw against companies like Rusal, which will be more disruptive for the financial services sector and for the markets, largely because I think, as Brian has already highlighted, the targets are going to be companies along the same size as Rusal and EN+, and in some cases, if they're publicly traded, then obviously that's going to impact the markets as well. And what we then see is that secondary markets get impacted. And so one thing that I think will be different here is that, and we've already seen the sanctions on Russian sovereign debt, but this time there was the removal of the general license authorizing secondary market trading. So what that means largely is that if you're in the mutual fund, or if you've got exposure to sovereign debt through another angle or indirectly, then this becomes a problem as well. And so what we have seen from the Chinese military industrial complex sanctions, where there's restrictions on dealings in securities of those entities, is that it becomes difficult in order to discover, in all cases, where the exposure is, especially in the event of some of the private equity dealings or investments, and in the mutual funds cases, in order to figure out, if you've got sanctioned or restricted debt in your portfolio. So this time around, I think it's going to be a little bit more complicated. And also, just to highlight Brian's comments on the potential for cyber attacks, what we've been hearing from our clients is that we expect the attacks will continue on the Russian pattern, which is to focus on the financial services sector, but also to reach out to smaller businesses in the supply chain that may not have the appropriate levels of compliance or sort of abilities to respond. We also have seen an uptick in the amount of ransom attacks or cyber attacks in the M&A space. So when a company is in the midst of a merger and acquisition, and there's sensitive public data out there, it makes it a really good time for them to be exposed to a potential cyber attack or to ransomware, because their share price is particularly sensitive and could fluctuate dramatically if information gets leaked. And so just from that perspective, I think that this time around, it's going to be a lot more complicated, and there's going to have to be more dialogue and more nuanced licensing in order to mitigate the exposure to European and US and Asian financial institutions, and also to traditional manufacturing sectors as well.
I think it'd be interesting if we could just spend a few minutes on this topic of sanctioning President Putin himself as an individual. I've been sort of struck by some of what I've read on that we have not done that thus far. Recognizing that you cannot probably share any classified information you may know from your prior roles, I mean, to what extent, some people have suggested that Putin could be the wealthiest person on earth. I don't know if that's true, but I guess the question is, how would you characterize what we know about his wealth and our ability to access it? I would think it's quite sheltered.
Brian, you want to take that, or you want me to take a shot?
I mean, I could offer up a couple of thoughts. I don't really have any privileged information on what's in the open source. Look, the goal of doing that is to public diplomacy, try to show the perceived corruption of the Russian state and President Putin himself. Tom, what you say is my understanding as well, that a lot of any wealth that the president may have is likely, not in his name, or in the name of associates and things like that. So I think the goal of that would be as much a public diplomacy goal as anything else. I don't know how much direct information is actually out there on the location of, if you have anything to add.
No, I think that the people like Putin and people in his inner circle have learned from the Deripaska designation from 2018, which is, get everything out of your name. And one thing from the anti-money laundering side of my practice that we've learned is that the Russians are very good at layering transactions and working through higher risk jurisdictions with respect to company formation. So, the complaint we always had was if you were trying to trace Russian money laundering, oftentimes you would see it layered by LLCs that disappeared in a jurisdiction like Cyprus. And so, just given that experience, I would imagine that Putin is taking care of his assets in order to make sure that the exposure to the U.S. markets or to U.S. dollars is limited. But at the same time, it also potentially hampers his ability to engage in diplomacy, which is, I think, why we'd heard some of the European Union member states saying that they were fine with designating people close to him, but had wanted to leave him off of the list specifically so that they could have diplomatic channels open.
Cari, do you have a sense for where the pressure point on Putin is strongest? Is it through the banks, by hitting the banks? Is it? I know it's all of the above, but where do you think the pressure point is strongest? Is it with the banks? Is it with the oligarchs? Is it the technology restrictions and export controls that could be rolled in? Do you have a sense for that?
I think it's collective. I think it's all of the above. So the general consensus is that he's done a good job of hiding his own assets, but you put pressure on those closest to him so that they will essentially act as your deputies and put pressure on him. But for him, sort of expanding the Russian economy and having a thriving domestic policy largely relates on the ability to engage in trade. And so, as Brian was indicating, this foreign direct product rule, which was applied to Huawei, would severely limit access to anything that had components in it that were originally U.S. origin. So from that perspective, what we saw to Huawei could happen in the oil and gas sector, and I think that would be very powerful.
Brian, maybe you could speak more specifically to your role at MUFG as the head of sanctions compliance globally, how challenging that is in terms of working with our clients, our risk appetite for engaging in activity with Russia, both us and other banks, from your perspective, and how we sort of resolve the disparities of different sanction policy across different jurisdictions. I think it'd be interesting for our corporate clients to hear how you weigh those challenges and operate.
Sure. Well, first, these developments they're new and they're not new. Certainly, sanctions against an economy as significant in this context, we haven't really seen that since World War II. So it is historically significant. But we've been here before to lesser degrees. We have seen this playbook roll out in the context of Iran, Syria, North Korea. even to some extent Russia to date. So the answer from a compliance officer perspective is your program. You use your program. Hopefully you've established a program that understands your risk, that can quickly and rapidly and preemptively identify your exposure. One of the benefits to what's happening recently is that there's been a fairly long lead up. You don't always get that. So there's been a lot of breadcrumbs that the administration has left to tell financial institutions and others what these sanctions are going to look like. So you can really understand, we had the opportunity to understand our exposure before all this and put ourselves in a good position to manage going forward. If you're an institution or a corporate that hasn't sort of done perhaps everything that you wish you had in that space, there are wind down GLs, so there is a little bit of time to do that, but it really is critical. Everything starts with intelligence and understanding what your risk is. With respect to sort of how do you think about dealing with Russia globally, because Russia is different than other sanctions targets. Iran, it's relatively easy to say, hey, Iran has an economy that's roughly the size of the gross state product of North Carolina. Let's just cut off Iran globally. Russia, a little different. But what we're seeing is pretty strong multilateralism. So you're seeing U.S., EU, Japan, Singapore kind of coming into alignment. And so in those areas, the law answers it for you. The prohibitions are there. Elsewhere, you want to consider, the posture of local regulators. You want to talk to your regulators. You want to talk to your peers. Actually, everywhere, talking to your regulators, talking to your peers. I can't emphasize enough the importance of understanding what your peers are doing and staying with the pack. Sometimes in compliance, fortune does not favor the bold. In business, perhaps compliance, maybe less so. So understand what your peers are doing. And then, no sanctions program is comprehensive. And this is not yet, although it could get there, a comprehensive sanctions program. It's got elements of it, but not entirely. So there are things that will continue to be allowed. And indeed, there may be a policy interest of certain governments in allowing those things, export of medical equipment, food, things like that. So there may well be avenues for firms that are operating in those sectors. I mean, there certainly will, to continue commerce carefully with Russia.
So Cari, let's have one last question, and then I want to turn it over to the audience here for the last 20 minutes. But just at a high level, and I know the answer to this will vary by industry, but what advice would you give for corporates? Brian has provided the bank perspective. What advice would you give for corporates in this sort of rapidly changing environment? What type of steps should they proactively be taking to anticipate and prepare themselves for a world of more stringent sanctions?
Sure. So the guidance is going to depend on whether you're a U.S. entity or whether you're a foreign subsidiary or a foreign headquartered entity. And essentially, if you have the luxury of being a non-U.S. entity doing business in Russia, then you are looking to see whether you've got exposure either to the sanctioned regions or to high-risk exposure to high-risk industries in Russia, like the oil and gas sectors, and exposure to the potentially sanctioned banks that Brian ran through, and also U.S. dollar or U.S. person nexus. So the theory still is that if the sanctions are as robust as we think they're going to be, and there's exposure to debt, then you want to be able to be, as soon as that goes into effect so that you can take advantage of the wind down period, you want to be able to have at your fingertips essentially a catalog of your risk exposures so that if necessary, you can take your U.S. personnel and take them out of the equation in order to extricate yourself. Or if you've got transactions denominated in dollars and you need more than the wind down period, you can switch currencies and do things like that. The other thing is going to be, the other suggestion would be consistent with what Brian has already said, which is it's very important if you're a part of a trade association to participate in the trade association, because as Brian said in the compliance space, but it applies equally in the business sense, if you're part of a trade association, you have a collective voice, and you can go to the regulators and you can go to your government and request help, request wind down authorities, request adjustments to the sanctions that you may not want to do as an individual in, for example, the oil and gas sector, because you're going to just be a higher target for a focus of either negative press or for reputational issues. But so the trade association activity actually provides you with a very nice buffer. And then the other thing that we have suggested, both in the China context, given the rapidly escalating sanctions exposures there under the prior administration, and now in the Russia context, is to essentially set up within your own business these triage groups. So you would have your compliance person, but you'd also have business, government affairs, and legal, so that you're looking at a problem holistically. So one of the big things that we're seeing for multinationals with significant presence in Moscow, for example, is, all right, they can look to see whether they've got exposure to debt with Sberbank or Alpha or VTB or one of those. But what happens if they stop doing that business? Is there exposure under Russian law? Would there be negative media pressures? Is there some other legal factor or business contract that doesn't allow for an exit that needs to be taken into account? So these triage teams, we actually think have seen them operate really well within a business in order to essentially holistically look at a problem, identify all of the risks, and then come up with some solutions that may work.
Very, very interesting, very relevant. Lee, why don't we go to audience Q&A? And if there is a long list of questions, maybe you can just let us know so that Cari and Brian can keep the answers a little bit more brief so we can cover as many questions as possible.
Gotcha. We have about a half a dozen questions at this point. So the first one is, do you want to just expand on the thoughts of removing sanctions for SWIFT?
Yeah, I think that's a great question. Let's spend a minute or two on that. Let's do each of you one at a time. We'll start with Brian.
Sure. A SWIFT cutoff for Russia certainly is in the playbook. I don't think we're going to see it in this initial sanctions response for a couple of reasons. One, you have to get consensus. Well, you have to get SWIFT on board, and you have to get the European Union on board. And the SWIFT cutoff, we saw it in the context of Iran before. It was done. It was effective. It was not without its controversy, because it's a big shotgun approach, right? You take out all of the Russian banks, cut them off from the primary interbank messaging service, and there will be areas of commerce, no matter what, that are still permissible. And you can largely get to the same objective, I imagine, government policymakers, by designating the major banks. If you designate Russia's major financial institutions, you're kind of getting there while still preserving the ability of lesser, financial institutions perceived as being less connected to the government, being able to facilitate desirable commerce.
Cari?
Sure. So the only thing I would add is that I agree with Brian. I think keeping SWIFT off the table makes sense for a couple of reasons. One, the NGO community is still going to be actively involved there. Second, we've got exports of medicine and medical devices contemplated in agriculture as well. So if you were to summarily deny access to SWIFT banking or SWIFT messaging services for the financial sector there, you're also making it virtually impossible in order to engage in humanitarian trade, which we see in Afghanistan, but also in exports of agricultural products, medical devices, and things along those lines, which has been the complaint that the Iranians have lobbed over the transom with some regularity in the sense that if you have licenses to export, but there's no way to make the payment chain work, then you don't really have licenses for the humanitarian sector.
Lee, next question.
Gotcha. Is China versus Taiwan next? And if so, when do you think and how will the West react?
Listen, let me just chime in there very quickly. I think that narrative is my own personal opinion. Ukraine is a metaphor for, China and Taiwan moving next. I think it's certainly not a parallel situation by any means. I think there's a time dimension to that question in the sense that Putin is arguably in a weakened economy and time is not on his side. The Eastern Bloc and many countries, including Ukraine, are moving away from him. In the case of China, it's the opposite. Time is very much on their side. They're only getting militarily and economically stronger. I think also strategically, they are not parallel. Taiwan is strategically important to the United States in a very different manner that Ukraine is, very important to Asia-Pacific security, obviously the largest manufacturer globally in semiconductors and other technologies, and thirdly, the unique history we have going back decades to 1979 on the Taiwan Relations Act. So I don't want to be overly naive, but I think that they are two different, very different situations.
Great, thank you. Next question. What are the counter sanctions Russia could apply to Western institutions and how effective are these and what impacts could they have to Western banks?
Sure. Well, Russia could apply counter sanctions, and they have applied sanctions under. There's a massive asymmetry, though, in systemic financial and economic power between the U.S. and Russia. So financial counter sanctions would have a limited impact. I don't think that's going to be the primary avenue of the Russian response. I think you're going to see more, moves in the cyberspace. And then, of course, they've got, the military operations they're doing. And that, I think that's the primary counter. But, certainly they could designate foreign banks. They could shut down foreign banks that are operating in Russia, all of the kind of usual measures.
We also have been hearing that the maritime sector is expecting disruptions to the shipping lanes in the Black Sea in response, which would affect supply chain. And then, of course, we would expect potential disruption in some of the extractives exporting regions. Aluminum is a logical place to look to again. But I think Brian's instincts are right, spot on, which is what we've seen threatened most aggressively is the cyber reaction.
Great, thank you. What is the role of our intelligence institutions in helping the U.S. financial community sanction individual Russian oligarchs or Putin personally?
Yeah, look, there's no secret to this. The economic sanctions, the application of economic rests on a foundation. So the intelligence pulled together by the Treasury Department through the Office of Intelligence Analysis and other agencies absolutely informs the targeting.
To what degree does intelligence within Treasury, I assume they work extensively with our other intelligence capabilities?
Yeah, that's right. So, Treasury is not, generally speaking, a collector of intelligence produced by the more traditional intelligence agencies. So that's really what Treasury does. They put out requirements asking for certain types of information to be collected and provided. So one of the things that Treasury was really able to do that was somewhat revolutionary in this space was sensitize the intelligence community to collect information on the financial networks of targets, threats to the United States. So that really resulted in a ton of new information that is then enabling a lot more targeting. But that's really the dynamic: collection requirements, and then analysis, and then feeding that into policy.
We've also seen. Sorry, go ahead.
No, I was just handing it over to you. Go ahead.
Yeah, from the private sector side, I guess I've been around long enough now that the FBI agents and Homeland Security agents know my clients and have reached out to us on numerous occasions in the maritime sector with respect to Iran, to provide us with information relating to, hey, your client has got Iranian cargo. Do you want to cooperate? Do you want to work with us? And so I think that in that sense, oftentimes the information that U.S. law enforcement or the U.S. intelligence components will have will work on a collaborative basis with the private sector. So instead of going after our clients for sanctions violations, because of course there's strict liability, you don't get, there's no innocence argument except at the penalty stage. What we're seeing in the Iranian context, and it very well may happen in the Russian context, just because the Iranians and I suspect the Russians would become very good at sanctions evasion, avoidance, and layering their transactions, is oftentimes you could expect to get an outreach call from an agent in the U.S. government saying this LLC you're working with or this particular transaction is actually part of a larger front organization for a sanctioned target. Do you want to work with us? And so I would think that if the sanctions are really here to stay and they're to get nastier, that we would see that type of role for law enforcement and the intelligence community as well, because if essentially without the collaboration between the private sector and the government sector, it's really difficult to make the sanctions programs work. And so to Brian's point, the U.S. government's going to have all kinds of information that the private sector won't have. So if there isn't this cooperation and collaboration, then oftentimes they're not as effective.
Great. What actions are expected by the EU since they are so vulnerable to energy from Russia?
Cari, why don't we start with you?
Sure. So the European Union has essentially said that they've all agreed to take Nord Stream offline, and they've essentially done that through Germany. The understanding is that the Europeans and the Americans are going to start to look for alternative sourcing for energy resources, because without access to the Russian gas sector, it makes it difficult and rather painful for the Europeans. So I think part of the analysis really was over the last couple of weeks has been looking for alternative sources. So the Europeans have been essentially lockstep with the Americans because the idea was that the only way you could dissuade Putin was if there was no divide in the armor.
Brian, are you seeing much in the way of gaps between U.S., EU, and UK? Highly coordinated here?
Yeah, I think it's highly coordinated. That was one of the stated intentions of the Biden administration in terms of sanctions policies, to really return to intense multilateralism. I think you're seeing that play out here. Of course, the U.S. is moving the fastest and the strongest, and that's for a variety of reasons. The legal structure allows for imposition by fiat, by the president. But UK is moving quickly. EU going through the EU processes. Japan also announced that it seems like they're going to follow pretty much the same path. So I think you're seeing a lot of alignment.
How should we think about foreign banks operating in Russia that receive monies from onshore sanctioned banks?
Brian, any commentary there?
Well, I mean, foreign banks operating in Russia through local clearing, environments, sanction Russian banks, and that's going to be them. It'll depend on their legal personality. If it's a Russian organized sub, it could be permissible. That doesn't taint that is a phenomenon where a U.S. bank operating in a jurisdiction, sanctioned banks, and having to deal with them through a local clearing mechanism, that's not new, right? That's not new. And OFAC sort of, I think, understands the dynamics around that. I don't think if there's a foreign bank operating in Russia dealing with local Russian banks that necessarily taints them.
What sectors of the Russian export sectors are likely not to be sanctioned?
So beyond SWIFT, is there anything that appears to be off the table, Cari or Brian? I suspect not, but anything come to mind?
Maybe perhaps agricultural would be off limits. So agricultural exports coming out of Ukraine may be off limits. I think the humanitarian sector, we would still see things, Russian involvement in, mine removal and things like that would still, in the NGO community, may still go forward. But short of that, maybe some collaboration on, medical research. But short of that, I think everything's on the table.
Lee, I think we have time for one last question.
Can you expand on the comment regarding sanctions on purchases of Russian foreign debt? To clarify, is that specific to sovereign debt versus corporate?
That's sovereign debt. That's right.
That was a quick question. I guess we could handle one more. Lee, anything?
Do you feel that the Western press has been accurate and fair in their coverage of the conflict? My Russian-born husband, who's lived here for 30 years, paints a fuller picture for me, especially as it pertains to the eastern border issue.
So that's a really fascinating question. When all of this started to break a couple of weeks ago, we have the advantage of having a Russian office, a Moscow office, and so what we started to do was benchmark with our Russian clients and then with our American and EU clients that have a large presence in Moscow. And I think what we were hearing were two very different stories and two very different reactions with respect to what the Western press is portraying as Putin's a very active aggression with respect to the Ukraine. And the general consensus was that from the Russian perspective was that there was other things relating to the history between the Ukraine and the Russians. And I think that, to a certain degree that got played out in the American media as well. What we were hearing from the administration was that some of the commentary that was being played out in the Russian media was largely talking points that benefited the end goals of the Russian administration. And so, I think that there's always differences of opinion, and it always helps to read both the EU, US, and the Russian press in order to get a fuller story. But I don't think that our Russian colleagues expected the activities of last night, much like I think a lot of people were surprised as well.
So, Lee, I think we're going to wrap it up there. I just want to say here at the end, these are very serious, both from a humanitarian perspective and geopolitical perspective. These are very serious issues that we've been discussing today. Cari and Brian, you both have a very long history of extraordinary work in both the public and private sector. We thank you for your work. We thank you for your sharing your expertise here today, and we look forward to continuing the discussion. Thank you to all our clients who dialed in today. Please don't hesitate to reach out to your respective MUFG relationship officers, and to the extent that you need any other assistance or have any questions. Thank you so much to everybody. Have a good weekend.
This concludes today's session. You may now disconnect.